Good afternoon and welcome to Mid Cap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Vivek Iyer and with me today is Hormaz Sadakia. Good afternoon, Hormaz. Well, the Santa rally is finally here. We see a gap down opening, but every day we're also seeing a recovery. Today is another session where the Nifty has recovered and now almost near the 26,200 level.
Nothing has changed in the market in the last 60 minutes or maybe all through the day other than my seating position from the last 30 minutes. But it's been that kind of a day. It's not very unlikely an expiry session as of now at least. But we have a lot lined up. Here's our headlines at 1:30 this afternoon. The stocks continue to trade in a very narrow range on this pre-Christmas day as FPI flows flip. Utilities, metals and energy are some top gainers while IT and consumer durables along with auto stocks are some drags.
Coforge under pressure, stock slumps 5% as the company says its board will mull a fundraise on the 26th of December. Street fears dilution risk and potential risk to profit guidance.
Bellrise Industries has signed a strategic agreement with Israeli firm Plassen to explore opportunities in the defense sector. The promoter also sold 6.5% stake to meet with minimum public shareholding norms ahead of a planned merger of two related entities. The management also tells CNBC-TV18 that they are maintaining their mid-teen revenue growth guidance.
A Cobra Post report flags worrying patterns of large value cash transactions at Cholamandalam Investment. The stock, however, surges 6% as the company says the allegations are malicious and baseless with ulterior motives. Reassures investors that performance of the company, its asset quality and its liquidity position continues to remain robust.
And Antony Waste rallies another 9% today after its arm wins another 330 crore rupee order for development of 600 to 800 tons a day mixed solid waste processing plant in the state of Maharashtra from the Thane Municipal Corporation.
Well, that's right. Those are the top headlines. And as you can see, it's actually very news-specific, news-driven stocks that are doing very well in the session. You saw a name like Antony Waste doing quite well. Another stock that comes up on your screen is actually Naukri or InfoEdge. That particular stock has surged to the day's highest point. Well, our colleague Ekta did point out Sun Pharma and a development overnight as far as the US FDA was concerned. The back of that Sun Pharma has cooled off from the day's highest point. An important specialty portfolio drug could be part of the MFN program. On fears of that particular stock has cooled off. The other set of stocks that are doing quite well in the session, have a look at Asian Paints. That particular stock has recovered, now mildly in the positive territory. But overall, especially when you're talking about large caps, it's the metal names that stand out. Have a look at a name like Coal India. That particular stock continues to remain the large cap Nifty gainer of the day. And other names like NMDC, Nalco, all doing quite well in the session. But this is our special segment, Mid Cap Movers. Hormaz has skipped across to the wall to take us to the mid caps that are moving around in the session.
Well, nothing much happening in the market as of now, but can't take away from the fact that there is enough and more stock-specific action that is going around in the broader markets. We'll start off with the gainers then. And among the gainers in the broader markets today, Deccan Gold Mines is one such name, 18% higher now on the stock. The rights issue that is currently open for subscription will close on Friday. Nazara Tech has seen some outsized moves in the last couple of weeks, another 10% added in today's session. Copran is another name, 16% higher on the stock, and Steel Exchange India too seeing double-digit gains in today's trading session. But the standout sector today has been the railway names, and the top 5 gainers on the Nifty 500, 4 of them are railway stocks. So look at Ircon, at one point was up 13%. Railtel is up 7, RITES announced an order win this morning, it's up 5%, and Jupiter Wagons has also surged over 13%, following up from yesterday's 20% up move as well. In the newsmakers of the day today, Cholamandalam has been the big talking point. That stock continues to sustain with gains of around 7%. Coforge is seeing some bit of recovery from the lows. At one point was down 5.5%, so some buying interest emerging at lower levels. Antony Waste, a second order in as many weeks, and Sangvi Movers too, up 5% off the highs of the day, but a boost from an order win. Stocks that are doing well on the volumes front, Orient Cement is of course another newsmaker. That too is off the highs of the day. It's down up 5% now. Jai Bharat Maruti has surged to the day's high, and Akums Drugs after ICICI Prudential bought stake in the block deal yesterday. That stock is off the highs of the day, holding on to gains of around 2.5%, but on very strong volumes. And lastly, some stocks that are bucking the trend, if you would like to call it, or some losers in the broader markets. DCX Systems saw one strong day of gains and has come off since then, 5% lower here. Also lower today, Newland Laboratories, Patel Engineering and Cartrade Tech, that has moved to the lowest point of the day, losses of anywhere between 3.5% to 5%, Vivek.
Well, thank you so much, Harmaz, for taking us through all of those large movers, especially as far as the broader end of the market is concerned. But it's a good time to welcome Srikanth Chauhan from Kotak Securities for a quick technical check on the market. Good afternoon, Srikanth. Thank you so much for joining us. Well, 26,200 now on the cards. Do you feel?
Good afternoon, Vivek. Good afternoon, Harmaz. Yes, if we consider the overall trend of the market, then it is not the end. We are going to see the levels of 26,500 or maybe 26,600 in the very near term. And in case if there is any correction, then it will be an opportunity for us to create some long positions. The reason is because we have seen broad-based rally in the market since last almost 10 days. And whenever there is a correction in the market, we saw bottom shifting from 25,700 to next level. And now the bottoms have shifted to 26,000 levels. So maybe the market may spend some time close to this 26,200 levels, but eventually we are heading higher, and any dip will be an opportunity to create some long positions.
Srikanth, good afternoon. What about specific stocks? What's on your list today?
Good afternoon, Harmas. So yes, we like a few metal companies in that Vedanta and Nalco, they did really well in last 7-8 days. But now from here, we are more bullish on stock like GMDC, Hindustan Copper, based on their technical formation. Currently, GMDC is trading around 530, 531. If we consider its technical pattern, then it is forming higher top sort of formation and higher bottom. So higher top, higher bottom is clearly indicating us that the stock is into the specific bullish trend, and we can expect the levels of 575 or 580 in next few weeks. So it's a positional trade to buy at current levels with a stop loss at 510 on the downside. But we are expecting target of 580 or 590. And the other stock on which we are bullish is Indus Tower. There also we are seeing gradual upward activity. It is forming rising diagonal sort of formation, and we are expecting upward breakout from the stock. So from here, the stock can move towards the levels of maybe 450, 455, and we can keep stop loss at 400 for creating any long position.
Srikanth, if I may ask, it's a very limited trading history that you will have on the charts, but Tata Capital, that stock has moved higher today, and for the first time since its listing, it has come out of that very, very narrow range that it traded in, 315 on the lower side, 333 on the higher side. Volumes over the last two sessions have been very strong as well. Any view on the charts?
Yeah, I think, see, like whenever there is a lesser history, we try to analyze the stock based on its overall technical pattern on intraday basis. And based on the formation, yes, we are of the view that the stock is on the verge of crossing its important extension level, which is around 370. So from here, the stock can move towards the levels of 370. That's the view. The way the stock has corrected in last 15-20 days, and after consolidating a bit, it is crossing its all important levels, and it has crossed its previous high, as you mentioned. So based on its technical formation, the next level to watch out would be 370. But in the base case scenario, the stock may even move towards the levels of 420.
Okay, thank you so much for joining us, Srikanth, giving us a view on the markets, individual stock-specific calls, also answering our queries as well. We'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. CCL Products has now made its move towards the lows of the day, 4% down on the stock now, among the top losers on the small cap index. There's a very sharp down move in the last few minutes, so 4% lower on CCL Products. Also, another stock that has made its move downwards is Aegis Vopak Terminals. That too has now slumped to the lows of the day, 3% lower on that stock as well. So, a couple of losers there in the broader market. CCL products a very sharp down move in the last few minutes, and the recovery seen in Aegis Vopak 2 has been very swiftly sold into. But the newsmaker of the morning has been Bellrise Industries, and that is after the block deal that took place. Promoters were selling stake, and the company has also announced a strategic agreement with Israeli firm Plasson to explore opportunities in the defense sector. Promoters sold 6.5% stake this morning to comply with the minimum shareholding norms. Now, this is ahead of a planned merger of its two related entities. The management also told us that they are maintaining their mid-teen revenue growth guidance. Listen into a slice of that conversation.
Plasson itself is a $2 billion company globally. So it's massive and is able to garner share with all of the top suppliers in North America as well as Europe. So in that sense, the market opportunity is quite massive, not only in India, but globally. In fact, we've already started working with Plasson on supplying some components for their global exports. So that's already in progress, and we should see revenues of that in the next fiscal year. Defense and aerospace in general as a segment would be a higher margin business than our automotive business. We are maintaining the mid-teens revenue guidance as of now with stable EBITDA margins. What you'd appreciate is just this year we've announced 4 new manufacturing facilities. Right from our first earnings call, we have guided on merging or acquire 2 of our related party entities. One is Badwe Autocoms and second is Exumates. So if you were to merge both of these entities in, that would have pushed our promoter shareholding above 75%. And in that case, we would have violated the MPS norms set by SEBI. Hence, we have done this transaction in advance of the merger that we filed. And that is the reason why we have gone ahead and done this transaction as of today.
Well, that was the management of Bellrise Industries, one of the top movers in the session today, and seeing significant pickup post the block deal concluded. Well, the next stock on the radar is Cholamandalam Investment. Remember, last evening, Cobra Post alleged significant corporate governance issues. Gaurav joins in with more details on what exactly the management had to say regarding these allegations.
Well, yes, there was a media report from Cobra Post, which actually suggested that there are some discrepancies in the corporate governance that the company is following. And after that, Cholamandalam actually came up with a strong statement and clarification. What they said is that the entire allegations are malicious and baseless. Apart from that, they have cleared the air, it seems. And let me tell you what were the key allegations. First was that was related to the related party transaction. There was an allegation against high cash deposits that they have, and also the payments of fees paid towards credit rating and some underwriting practices. Now, what Chola's management said is that first is that they have reassured investors that all the practices are well in the regulatory framework, and at the same time they have also said that on the cash deposit, borrowers are predominantly catered in a way where borrowers actually repay in cash, and that is the reason and that is the segment that they have been catering to, and that is the reason why this cash deposit will remain. In fact, in terms of numbers, it has come down to 15% versus what it was at 50% historically, and at the same time they say that as a business these cash deposits will remain and they are all in line with the regulators. Apart from that, on the related party transaction, what they said is that all the related party transactions have been reported again in line with what the regulatory requirements are, and at the same time they have also given some of the numbers. Now, the 10,000 crore number which has been revolving around, they said that this number is cumulative for the last 8 years, and there were some related party transactions which were not falling under related party in the historical time, and that is the reason why they may find some discrepancies, but it is in line with what the regulatory requirements were even then. Lastly, on the payment to rating agencies, they say that this is actually industry practice. It is not something that they are doing on their own. In fact, if you look at the ratio, they have paid around 20 crores for the money, 1.7 lakh crores that they have raised in the past few years. And if you conclude and if you take out the ratio, it is again a bit lower than the industry average, is what the company has said clearly. Apart from that, they also said that all the operations of the company are carried out as per the law of land and at the same time as per regulatory guidelines. So all in all, management was very clear that all the allegations made were baseless, and at the same time they gave confidence to investors that the company is following all the regulatory requirements. In fact, for third quarter, they say that disbursements are likely to remain strong and it could be a turnaround for the company in third quarter. So all in all, a very positive word from management. Positive words were there from analyst community as well, because Murugappa Group and Chola, they actually hold some credibility in the market, and as a result, if you look at the stock performance, it is holding up in trade more than 6% in the day today.
Well, that's right, Gaurav. Markets, at least for now, are shrugging off all of the allegations and the concern that the Cobra Post article has mentioned, and clearly taking the management's words at face value. Well, we now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. Now, as the year comes to an end and the focus shifts on what is in store for 2026, Nigel is here to tell us how the upcoming year shapes up for the aluminium companies and the industry as a whole.
Well, that's right. Aluminium prices are ending 2025 close to the highs that we have seen this year. So the big question is, does aluminium have more steam left for the next few years? The answer could probably be yes, because there are two factors at play. One is demand is rising and supply is tight. Let's focus on demand first up. Aluminium demand is moving towards a structural story as electronic vehicles use a lot more aluminium than traditional petrol or diesel vehicles. Solar renewable energy projects, well, they are aluminium heavy, and global grid expansion as well as electrification are only accelerating. Put it all together, aluminium demand is estimated to grow at around 2.5% per annum for the next many years. The booster shot is supply growth isn't keeping up. The global aluminium inventories are sitting at multi-year lows. The LME aluminium stocks, well, they are down by roughly around 20% on a year-on-year basis for the past month. China, the world's biggest producer, is already running at around 97% capacity utilization. Production growth in 2025 has been just around 2.5%. And China's capacity is capped. So you'll ask, what about outside China? Well, things ain't easy out there as well. Aluminium smelters, well, they are competing with AI data centers for electricity. The US, Europe, and Africa, all of them are struggling to lock in longer-term power contracts, which means fresh supply of aluminium could probably be hard to come by. Just to highlight a few examples with regard to the power issues. Century Aluminium Smelter in Iceland, well, it faced a partial shutdown in late 2025. That's in late October 2025. While Mozal Aluminium Smelter in Mozambique, that's set to be placed on care and maintenance from March 2026 because the smelter was unable to secure an electricity supply agreement. Nalco joined us here on CNBC-TV18 and they said that they expect aluminium to stay in deficit for the next 2 years. On the cost side, aluminium cost curve is hovering around $2,400 per ton for nearly 90% of the producers. Now, in a deficit market like this, prices usually stay well above this cost curve. Let's wind it down then with the valuations of the listed plays. Listed aluminium plays, that is. Hindalco, well, they benefit from higher LME prices through its Indian operations. Though the near term, well, they'll see cash flows which will get impacted because of Novelis's Oswego unit, which was impacted by a fire. Nalco, well, they have soft alumina prices for now, but they'll benefit from stronger aluminium prices. And Vedanta's aluminium business, well, it contributes most of their EBITDA and stands to gain because capacity additions are coming on stream and they're also working on lower coal as well as bauxite costs via sourcing most of their raw material from captive sources. Bottom line, with demand structurally rising, supply constrained, aluminium could remain firmer for longer. That's the hope at least.
Well, thank you so much, Nigel. The key takeaway being that aluminium could remain firmer for longer, as you just mentioned. Well, moving on, Tata Motors has surpassed more than 2.5 lakh EVs since 2018. In fact, Tata Motors PV's MD, Shailesh Chandra, tells CNBC-TV18 that they will decide to pass high commodity prices to customers in the coming weeks. Let's listen to excerpts from that conversation.
Tata Motors has, reached a very important milestone in our EV journey. We have crossed sales of 2.5 lakh electric vehicles in the country since our inception of the business in 2018 as far as electric vehicle category is concerned. Input cost increase has been a reality, whether we talk about commodity price or the impact of forex and all. And therefore, this is one area where we did not get an opportunity in the stage in the market was where it was initially pre-GST 2.0 implementation. Actually, the industry was declining and therefore it would have been very uncomfortable to the customers to go for buying cars if we had increased the price then. So therefore, as we are entering the new calendar year, definitely we are reviewing whether, how we should treat the pricing of the cars. And there are two aspects that we have to keep in mind. One is the input cost, which has increased. But on the other side, the initiative that the government has taken of reducing the duty rates. We'll have to see the residual impact of the commodity or the input cost increase, to what extent we have to pass on. We are reviewing that. And if we have to pass on a bit of that commodity price increase, we'll decide then that, on in the coming weeks.
Well, some bit of move upwards is what the Nifty is witnessing currently, back towards the 26,200 mark, 26,205, that important level to watch, which is the closing level of the 5th of December. Final 90 minutes of the trading session on the other side. Vivek and I take your leave. MF Corner on the other side.